Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. As usual, I'll be discussing key earnings and economic data for the coming week. Starting with corporate results, we have Autodesk reporting on Tuesday, Jack in the Box, Workday, RPC Group and Britvic on Wednesday, and we also have Barnes & Noble, the Kroger Company, Ulta Beauty, Daily Mail and ICAP all reporting on Thursday. Moving on to the economic calendar, OPEC meetings, UK bank stress tests, the Bank of England, the European Central Bank and Bank of Canada's financial stability reports will be the major events to watch. On the data front, we have US goods trade balance and Richmond Manufacturing Index on Tuesday. Japanese retail sales and US preliminary GDP are out on Wednesday. It's a busy day on Thursday with Japanese industrial production, Australian private capital expenditure, China's manufacturing and non-manufacturing PMI, the Eurozone's flash inflation estimate and unemployment rate, Canada's current account and core PCE and personal income and spending in the US, and finally Japan's inflation and unemployment, Canadian GDP and the final manufacturing PMI from Japan, the Eurozone, the UK, the US and Canada all on Friday. So, starting with the OPEC meetings, the Organisation of Petroleum Exporting Countries will meet this week. The OPEC and its allies are expected to extend production cuts beyond March 2018 in order to continue providing support to oil prices as the supply and demand gap tightens. The extension of OPEC's output cut agreement until late 2018 has already been widely priced into oil prices. So unless there's an announcement of deeper cuts or a sensibly longer prospect of lower supply, which are highly unlikely, the OPEC statement next week could bring along buy the rumour, sell the fact movement. On Tuesday, the Bank of England's financial stability report and the UK bank stress test results will be released. The BOE will publish its assessment of conditions in the financial system and any risks to financial stability. Traders will be seeking any clues regarding the future of the UK's monetary policy and recalibrate their expectations. It is highly likely that the BOE will point at Brexit risks and reiterate its dovish stance in the short run. Remember that BOE raised rates by 25 basis points at its latest meeting to temper the rise in British inflationary pressures after the headline inflation hit 3%. Pound traders will remain sensitive to any developments on Brexit negotiations. The pound gained last week on news that the UK could consider doubling the EU divorce bill to break the impasse in Brexit negotiations. Any negative news on this issue could erase gains and increase selling pressure in pound markets. In Japan, October inflation will be in focus. The inflation ex fresh foods, which is closely monitored by the Bank of Japan, may have accelerated to 0.8% year on year from 0.7% printed a month earlier. Although the inflation may have improved, the actual levels are still far from the BOJ's 2% inflation target. Therefore, the Japanese yen could pay little attention to the data and dollar yen could continue seeking direction according to the moves in the US dollar and US yields. The FOMC meeting minutes weighed on the US dollar last week. The minutes revealed some members' concern regarding the tepid inflation. This being said, the December rate hike is still priced in with more than 90% probability. However, the speed of the Fed tightening beyond next month is uncertain. It is important to note that the latest data showed a slight pickup in US core inflation figures after a 5-month stagnation. Therefore, the macroeconomic data will likely continue having a significant impact on Fed expectations. So let's look at the data. The US third quarter GDP read could be revised on the upside next week. Analysts expect a 3.2% growth versus 3% printed earlier. A solid read could help to confirm the expectations of an imminent rate hike from the Federal Reserve. But given that the expectations of a December rate hike already stand above 90%, the upside potential in the US dollar could be limited and a positive move may not be sustained. Investors will remain alert to any developments regarding the US tax reform bill. The US stocks hit new record highs last week. The long end of the US yield curve declined as pension funds are suspected to increase their allocations in preparation of an eventual positive outcome. That's it for this week. Thank you for watching. There will be no week ahead video next week, but we'll have Jasper Lawler back the following week to discuss his analysis. In the meantime, if you wish to get updates as they're released, please follow us on social media.